This is the fastest adoption of any technology in all human history. The internet, with 150 million users in 1997, was growing at 63% a year. Crypto, with 150 million users, is growing at 113% a year. So we go, because it's an exponential trend, we go from 150 million users to 1 billion users by 2024. That's how fast this is growing. Currently, it's a $2.5 trillion market cap. If we look at how fast tokenization is eating into other assets and growing itself, and we look at those adoption numbers, then the reality is all of the other asset classes, global equities, global bonds, global real estate, are all between 200 and 350 trillion, with the derivative market being 1 quadrillion and FX even bigger. So the thought process is that therefore, if crypto goes to 250 trillion, which sounds about right, and it's
100x in 10 years
of an entire asset class, we've never seen anything like that. Mankind has never seen a larger wealth creation opportunity in a shorter period of time in all of history. Even oil didn't happen as fast as that because there wasn't enough uses for it. This, because it's digital and built on top of the internet, means you've kind of got Metcalfe's law on top of Metcalfe's law. So the exponentiality of the returns is simply gigantic. Now, let's say Raoul's an idiot and it all goes to zero. So the downside is, let's say I'm going to use Ethereum and let's call it 4,000. So we lose 4,000, but if it goes 100x up, you would take that risk reward forever. Now, it's not going to zero. Is it going to go down 50% to 2,000? Let's say that's the risk. So it's 50% downside, 100x upside. Okay, that's a 200 times risk reward. You know, this is why nobody cares about most of the macro stuff anymore, because we all saw the rise of the other Metcalfe's law business models like Amazon, Google, Facebook, Apple, even Tesla. And we're seeing this again, but in an entire asset class of which we can participate this time as both participants in the networks and owners of the networks. And it's available to everybody. If I'm right, and let's say you're a cynic and you put in 1% and I'm right, you can still make 100%. Right? You can double your net worth with a 1% allocation. So you can be a cynic and take the bet, or you can be like me and put, a large part of your liquid net worth into it because you really want to capitalize on it. Fine. You take your journey, you take your risk profile. That's all good. But to not have it makes no sense whatsoever. Again, you might not like it. You may not agree with it, but nobody cares what you think. The market is what matters, and the adoption effect. Again, people become emotional about assets. You shouldn't get emotional. You should look at the cold hard facts of it. There's no shock that I sold out. I haven't sold out. I've kept adding all the way through. I just switched my portfolio towards Ethereum and now almost entirely sold out of my Bitcoin and invested more in Ethereum and then a bunch of other tokens as well. And that was based on an understanding of network effects and how many people were joining the Ethereum network and the number of applications being built on it, which is basically what drives Metcalfe's law, the value of the network. Also, I noticed that the community within Bitcoin was a little too overly tribal, and that was forcing people out of the community. So we've got one community that's shedding members because it's not welcoming, another community that's very welcoming, that's growing extremely fast. And, I'm a macro guy at heart, so I just look at the chart of ETH versus Bitcoin and it was going to break out. So I just moved all my eggs into a different basket.
Well, and
if I'm looking at it right now on my Bloomberg screen, ETH's up 430% this year and Bitcoin's up 65%. So it kind of worked. So do what I do. It sounds ridiculous, but it works really well. You put the money in, your overall risk, what you're prepared to lose. Let's say it's down 50%. That's a reasonable estimate of what you should be not concerned. We had a 50% drawdown this year. So you say, well, 50%, maybe even 60%, maybe 70%, whatever the ridiculous number is. And then you don't look at your P&L. You can allow yourself to look at the P&L at all-time highs, just so you can just smile to yourself. You don't look at it. You can look at the market. I mean, I've got the charts up. I've even got the bloody hourly chart up. I don't trade hourly. I don't trade my position at all, but I look at it because I like to kind of follow the structure of the markets. So I match my investment horizon with my time horizon of the trade, and I satisfy the adrenaline buzz by messing around looking at short-term charts. I don't trade at all. But what I did to solve that same problem was just buy an equally weighted basket of.
Yes.
So I just put, it's like, 80% Ethereum now and 20% in an equally weighted basket. Guess what? My second biggest holding right now is Sandbox, which is a
Oh, I love it.
Metaverse token, because it went up 20x in a month and a half. And you don't know what's going to move. You know these layer ones are doing well. Just own a basket of them. And that whole game is about, okay, Ethereum is overly popular, so it's becoming expensive to use. So these ones trade off decentralization for speed and price. So, and that's fine. This is really important. You're playing an exponential trend, not a mean reverting trend. You're crazy to rebalance. You might periodically, because you want the cash, to take top slice profits.
I agree.
Really, you need to hold the position because your view is a 10-year view. So don't trade on a 1-year basis or a quarterly basis, because then your trade horizon doesn't match your time horizon, which was the basic thing that Paul Tudor Jones taught me. Is the best people in the world, trade horizon matches their time horizon.
Everyone is looking for the blow off to end this cycle. Is it possible? I'm thinking back to October when Shiba Inu and Sandbox that you mentioned did so well. Was that maybe the top of the cycle?
I don't think so. It's possible. I don't think so. Because I know how much institutional participation is still to come and hedge fund participation. So I don't see it being the top of the cycle. I think that what we saw was interesting because we didn't really break above highs properly a month ago. We didn't get the retail going, I've got to get in because it was headlines, crypto makes new highs, goes up another 50% this month. We didn't get that. Sure, we got some in March, but that's pretty normal at that stage in the cycle. Feels like the cycles are elongating. My best guess is institutional participation drives and hedge fund participation in the first quarter drives retail participation, which drives a final stage bull market, of which ends when ETH 2.0 is launched, which I think is like by the summer. Could I be wildly wrong? Yes. But if my view is another 5 years, then I'm just basically watching it. Sure, if it goes up, if crypto goes up 5x from here, will I top slice some and pay for the big extension on my house I'm doing and stuff? Yeah, sure. But is that going to drive me out of the space? No. If it stays within the log channel, let's call it the weekly or monthly log chart channel, like Amazon has and Facebook has in their entire history,
right,
then there is nothing wrong. It is just part of the natural order of volatility of a network model stock.